has occurred.
Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. We got a lot to talk about. Tariff roulette continues, and it's had a substantial impact not only on the market, but on our opportunity. And the good news is, if you have a trade plan and you're prepared for what the market offers, at times you can capitalize on it. And this stream's about integrating Bookmap order flow tools with auction market theory, integrated with the volume profile in the intraday developing time frame. The volume profile, the way I use it is it's a chassis to overlay structured trades on. The TraderLab's a group of like-minded traders who come together to leverage their collective experience. The TraderLab's about the business of trading. And if you're not a profitable trader, in spite of your efforts, and we've all put a lot of effort in, and we all have winning trades, but at the end of the day, as they say, if you're not profitable, then I have a question for you. Why not? So maybe you can find some of those answers in the TraderLab, and you all have an open invitation to visit the lab, and there is no cost. Let's get to it right away. General disclosure somewhere. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. Remember, this isn't a trade calling room. What I do is I show you and share with you my experience in the sense of developing not only a trade plan, but understanding that trading is a business. It's not a video game. It's not gambling, unless, of course, that's your objective. The TraderLab is for serious traders who want to be in a professional environment and want to understand the business that they're attempting to be in. And the goal is to help you create sustainability and potentially a career path. And there is no cost for it. Now, many retail traders get hung up on indicators and prediction and being right, and I understand it, you understand it. What you don't understand is why you choose to do that. Because it seems so natural, but it's actually primal wiring. What would happen if you realized that you're trying to solve for something that is not what trading is? Is it possible that trading is not predictive, but it is 100% random 100% of the time? Now, most of us think it isn't. However, suppose it is. And if it was, how would you approach that environment to create a statistical edge and put the odds or probabilities in your favor that over a random distribution of outcomes in a 100% random environment that you cannot control, except if you can control yourself? Same as the casinos operate, only that way, with an edge over time, with discipline, intentionality, patience, and self-management, and having done the work outside of trading hours, that you bring your plan and yourself and your discipline to the market with vetted, structured trade plan, and then you're ready to go to work, and the outcome of any specific interaction is random. Welcome to trading, and if that interests you, you're all invited to the TraderLab. Now let's get going. We got a lot to talk about. Grab a pen and paper and be sure to review these streams. By the way, they're based on structured trades. There's 60 PDFs of these. You can download them in the Bookmap Discord TraderLab community. They're not plug and play. No way. The other thing is you have to reverse engineer these and make them fit your time frame or fractal. And I'm going to talk about that. That's why there's no such thing as plug and play mechanical trading. If there was, we'd all go to that one guru, hang out, plug in the trades, and go move the ATM in the basement. Don't you wish? Well, if that's what that's your belief, I'm going to suggest maybe you ought to review that. And again, past performance is not indicative of future results. Your mileage may vary, right? Now, this is the higher time frame. By the way, if you have questions, post them. I'll do my best. If you're in YouTube, post your questions. And if I can't get to them, there is a lag, by the way. Come to the Bookmap Discord TraderLab community. There's no cost. There's a link in the bottom of YouTube. All you got to do is verify your Discord email. Keeps the spam out. And I think you can support that. This is the higher time frame. Now, for me, higher time frame, these are called composite profiles. This is the volume profile. Now, if you haven't seen this before, you're going to think you landed on Mars, but I think most of you have probably seen profiles. When I started, they were not in the public space. They were just becoming available. And I think I learned it from the guy, I think I learned it in 1985 from Peter Stottlemyre, who created it. I actually paid and went to something called Market Logic School. And it took me years before I could figure out what to do with the darn thing. Part of that had to do with using indicators. I thought, well, I've got indicators and I have winning trades. Maybe with this, I'll make it better. I didn't understand the problem. The problem was the indicators. They were not the solution. They were the problem. But I didn't understand it. But that's another story for another time. This is a microcomposite. What is a microcomposite? It is the swings. So this is the swing low. This is the swing high. Inside of this is the volume distribution. So basically what the market does is it auctions. Now, what is an auction? It's shopping. And I always think of this, trading is so simple. It is so simple. Now, when I say simple, I'm not saying it's easy. And I'm also going to say the problem for us is it's random. That makes it difficult. Not the trade itself, but how we experience it and interact with the other participants, and having a vetted plan so we only interact with an edge. So what does it say? Language: too high, too low, retail. If we fall out of a distribution, we start it again. Too high, too low, retail. Now, let's come back. Now, you guys all know we had a big news event in the ETH. A court had said that the administration in the U.S. imposition of tariffs was illegal, and the market went nuts over that news piece. But let's look at the auction. Let's look at where our resistance or levels are. This yellow line was a high volume or retail price from the last time we were up here, and it was a potential target, maybe. We also had, I think this is 06 as the same thing. We have 5908, high volume in this whole structure. And then when we start getting down in time frame, as you think about it, we have yesterday's RTH retail price and the day before. This is balance. Balance means fair price. And then go up in time frame, fair price. What else do we know about this? Yesterday's low. What's going to be here? Sell stops. What's under here? Sell stops. And where's the retail price from here? It's down here. If we fall out of here, eventually we might come here, and fill the gap that's still open. And what did we do in the ETH? Now I'm going to move on right away. We took out this high and we squeezed the you-know-what out of the shorts. Well, think of this for this astute audience and traders. The market goes up to go down. The market goes down, go up. The market goes up to go down. The market goes down to go up. The market goes up to go... Let's go further. Now, before you fall out of your chair, put your sunglasses on if this is too bright for you. This is yesterday's auction. Now, this is a volume profile. It's a combination of market profile and volume. Now, it's not that relevant except to understand market mechanics. Yesterday morning, it was longs to there, which is the retail price from this day over here, target. And then I was looking for taking the stops out above this high. This was my plan for yesterday morning and getting up here. And that was my long trade. And not so much, profitable trade. But then the market fell out. And if we can't go up and get the stops, what does that tell you? These buyers were absorbed. And then the longs failed. That doesn't mean not profitable. It just means what happened. And then we left this little distribution behind. What's a distribution? Too high, too low, too high, too low. Retail. This is shopping in fractals. This is how the auction works. Here's another little piece. Let me just see if I got this. Anyway, this is the key. Too high, too low, too high, too low. We're not paying that. And we get in the car and we leave the store. Then we come down to this level. So the shorts, the first target was here. And then down to here. Now here, it's going to get more interesting. I know you're going, really? Yeah, really. And we have a high volume node in the Microcomposite at 08. So for me, once I got on the shorts, I was looking for this area down here, target, and then the extended target. I had no clue. I was done by then, was this. And these little black lines are called singles. And it's all it says. A single is a low volume area where the market raced through. So when you get this rotation, that's an auction. Too high, too low, too high, too low. But if I break away from it, we're rejecting and it rips. Then we pause. Too high, too low. Now you get out of here. Down again. Too high, too low, too high, too low, too high. Down here. Too low. Come back in. That's called mean reversion. Now, this is terminology. Don't worry about it. Then for yesterday's RTH, which is this is our fair price. So you can see these auctions. LVN, retail price, outside edge, clueless, who knows? Once you get above here and you get out of here, you're coming potentially back there. If you get above this, you're coming potentially outside somewhere, somewhere. So far, so good. How we doing? I'm doing the higher time frame because, guys, if you don't understand what's going on, what's the point, right? When you put the pieces together, it gives you a narrative of participant behavior. This is what trading the auction is all about. So let's look. What was the last retail price that we had rejected? Now, all this is in TraderLab, and I'm trying to rip through this for you because we got a lot to talk about. This was too high. Look where our ETH high is. What do you think? Now, in auction world, this is called a direct hit because they're levels of behavior. That's what they are. If this is too high, I'm out of here. I'm not paying that. The overnight volume point of control. It's the same as that, except this is current. This is the last auction is the ETH. Now, this is yesterday's RTH that I just showed you. Remember, lower distribution, all this, and too high. So, and yesterday's high, okay? This is the retail price in the ETH. So, too high, off the news. ETH, retail. I'm not paying that. Well, I'm definitely not going to pay that. I'm out of here. And we start coming down. What does that tell me? Language. This is the language of the market. I don't use any indicators. What do I need an indicator to tell me? What is it going to tell me? I don't know. I do know. I don't use them. So that ought to tell you something. Doesn't mean you can't use them. What it means is if you understand the language of the market, could you maybe deploy an indicator if you know where it is appropriate to use and when it isn't? Would that make a difference instead of plug and play with Google Translate and you sit back passively looking for the spaghetti to do something? And whatever it is, it's still spaghetti. We still have an open target below, I see. Okay, let's keep going. So This is, and I did this around 6 in the morning, the targets become filling the gap, getting to the ETH low, getting the settlement, and maybe taking out yesterday's low. Let's see what we have now moving forward. Now this, you can see I've got more in here. Let's look. So this, now this is what's important to set up the RTH, the open. Now what do I know? Too high? Too high? I'm out of here. Yesterday's high, right there. ETH mid. And this is called a low volume node. What it is a separate, remember how this works. Too high, too low, retail in a distribution. This is called trading in fractals. This is a fractal. Too low, too high, retail. LVN, low volume node. Remember. Why? We ripped through it. Now we did a little jiggle in the wiggle over here. Too high, too low. I'm not paying that retail price. That's a high volume node. I'm out of here. Too high, too low, too high, too low. I'm not paying that. I'm out of here. RTH open. Up to where? Low volume area. I'm not paying that. Hasta la vista. See you next time. Thanks for playing. We're going to send you a coupon to the buffet. Now, let's go further. RTH open. Now, watch. What was too high? Let's come back. Where is it? Ooh, it's way up here. There, ETH high. Remember the target, right? This is where all these levels come from. ETH volume point of control. Get out of here. Too expensive. You're out of your mind. Yesterday's high, RTH, ETH mid. Yesterday's volume point of control, which is your retail from yesterday, 08, the higher time frame, fair price, settlement, yesterday's low, hasta la vista. We'll catch you next time. Now, all that being said, are you guys ready to go? How are we doing in YouTube? Are you ready? Give a like, please. This is what it takes, in my opinion, to develop a plan and a business plan in order to operate in an environment that is 100% random 100% of the time. So let's take a look at this. We opened out of range in a gap. Not a biggie, but there's the RTH open. There's yesterday's high. We'll call that a gap. Now, for me, what's most important is what happened in the ETH, because that's the last auction where the participants are saying what's too high, what's too low. And I think we can all agree it's we're out of here. We'll catch you later. Thanks for playing. So, and the other piece of this is just a little something to think about. The market goes up to go down, and the market goes down to go up. If we blow out on news to the upside and we squeeze out whomever, whenever, what's your thought? Where's the fuel for the upside? Might it be gone? And if we get to a key level in the auction and the ETH high is there, might that be excessive? So therefore, if I come in today and I open here, and where was my low volume node? Got to bring it back. This is how plans work, guys. No plan, no bueno. Where is this thing? Right there, wherever that is. So maybe should have wrote down the number. I'm going to give it a wild guess, maybe 58-ish, because I can't quite see the number. So where is it? 58-ish, 57. Let's watch. Now, RTH open. This is your heat map. Shows stack liquidity. It's reflecting what's in the passive sellers in the book. This was the 59.60. It was too high. See you later. And RTH open gap. Now, what is it going to do? Great question. And for me, shorts only, but that doesn't matter. I have to wait for a trade. So this is the open. This is, and I'm against that low volume area, which is out here somewhere, very close. In fact, let me show you. Basically, that low volume is right there. I'm going to just throw it in here for you. I want you to see the auction. And why would you care about the auction? Well, maybe it's going to show you something much different than what your indicators are showing you. Because what it's showing us is not let's just call it a backwards looking mathematical representation of some derivative of price. It's actually showing us participant behavior. It's a bit different. So it's over here. So I know when the market opens, which is there, that this is an outside edge of the ETH. This is too high. And this is where we've been auctioning in the ETH. So if I'm outside, now I know if I fall inside, and this is my outside edge. Now, RTH Open, this is called Developing Volume Point of Control, the little yellow line. What is this thing? Shopping. What is trading? Shopping. I know. So if you're a shopper, you've got a, quote, leg up on everybody else who doesn't understand what this business is. It's shopping. What's too high? You go to this store, the price is too expensive, you're not going to pay for it. If the price gets too high, you'll notice the buyers, there's less volume. This is why volume profile kind of gives us an idea of valuation. I'm not paying that. Yeah, but it's on sale. Retail, high volume. So it goes too high, too low, fair price. Now, but what's the deal here? It does it in all time frames or fractals. So depending on how I trade or you trade, I'm then going to use statistics for targeting. Now, the problem for us is randomness. Is it going to go up? Is it going to go down? Where does it go up? Where does it go down? When? How? Who? Don't know. So can't solve for that. So I don't hold myself to being a predictor. I used to think trading was, quote, being right and knowing where the market was going to go. Holy mackerel. And not only that, it can't go any higher. I'm going to sell it. Meanwhile, those tire marks, I still got them. How about you? So what does it say? Here's what it says right here. Buy sweep, too high. Sell sweep, too low. Now, when I'm saying this, now this is all happening 2 seconds in. You know, I'm sitting here, and by the time 2 seconds goes by, I think I blinked once. Not actionable, informational. So what do I know? I see some selling icebergs here. I got buying icebergs here. What do you do with that? I don't know. Right here, nothing. Because right here is the fair price at the moment, and we're now going on 7 seconds. I can get as granular as I want to with Bookmap. And I want to zoom in. I can get down to milliseconds. No need for that. Can't see it. It flies, right? So I know my sellers are here. And this, give you an idea, delta. What is delta? Aggressors. Market orders. Who knows? I don't know. And then down here, sellers. Aggressors. They're absorbed. Sellers are here. Absorption. Why doesn't the market go up? You see this guy? Seller. Thank you. Next. Seller here. Buyers are here. It goes up. So I got sellers. I got buyers. What is this? Chop, chop, rotation. If I break out of one side and I pull back, here's the possibilities. Opening swing high is here. Okay. I can come up, pick these guys off, come out here, and then go down or keep going, whatever it does, part of the thrill. So I'm looking at this and I'm thinking this is a short, but being my nature is to be cautious, especially in an environment that we're currently in. And we're outside of yesterday's range. See, I'm going to wait for us to come inside. I'm just letting you know. I'm not saying, by the way, I always say, number one, I'm clueless, but I'm not ignorant. And number two, it's all random. So I have to wait. Once I get inside the range, now I want to get short. Let's look. VPOC migration. I'm going to label this. I got to go. I don't want to take the time to go back and look at where I got in. Because when I enter at times, I'm wondering, how did you get in there? You know, because I follow my plan. So I'm going to have to, I don't want to take the time. I got too much to talk about today. So I'm not going to, I will talk to you about structured trades, but some of the trades I take are not in the TraderLab. They are my trade plan, and they might be different than yours, right? This is called VPOC migration. Let's look at the language of the market. This auction, too high, too low, retail, they said, nah, I'm not paying that. They all got in the car and they drove away because it's too high. Now what? I've got VWAP mid above me. I have a low volume node. Remember those? Out here. And this is the new retail price. Why? We ran away. Everybody said, you're out of your mind. I'm not paying that. Language of the market. And we came down. We spent more time here, so we paused, and now we are rotating a new auction in the microstructure here. Don't know. It can do anything, right? Let's see. This is a TraderLab structured trade right here. So notwithstanding other trades that other traders might have, this is the first structured trade in TraderLab. VPOC migration. I made this up. I started trading this way, I don't know, late 80s, early 90s, put it all together. It probably took me 10 years to really get my brain put together correctly, at least as far as I knew. Before then, it was very random, and I didn't understand gaming theory, so it really took me a while to learn about and discover what business I was really in. I wasn't in the business of being right and predicting what was going to happen. I thought that's what it was when I started. There were no off-floor traders. Everybody was a floor trader. Remember, we're going for the first hour's low, and there's more under there. Not a recommendation, but we'll get to that. So this is the first short. Now let's look at targeting. This is the first target. This. Yesterday's value area high. Value, this is all profilage. This is where 70% of the volume took place inside this range. This is the first area to be looking at. What is that? It's this. So this is the value area. If I get in here, it sets up back to here. It sets up back to there. It sets up ETH low, and it sets up whatever happens, right? Everybody with me? Just give me a yes, and please give a like if you find this useful. First short, the job, subject to your plan, is to get risk neutral. First target. Now, I looked at this liquidity, and I said to myself, buyers are here. Now, what's important about this liquidity? Let's go a little order flowage for you guys. It's been in here since 7:30 this Central Time. So this to me is serious liquidity. Now, and you know, that means there's in the limit order book, there's somebody hanging out. It's probably Icebergs, right? Icebergs. Now, what happens here? This 35-ish becomes resistance. Just so you know. And I'm in the value area high. And my target, I'm going here. Yesterday's fair price. So I'm in this trade. I'm having a wonderful time. I'm starting to think about the ribeyes that are going to be on, as they say, literally the table. Oh, here's another entry, buddy. I forgot all about this one. Let me get back here. That's the first short. Pull back here. This is resistance. This is called VWAP to VPOC. It is a structured trade. Now, whether and mid, you can take this short to here if you have enough range from entry. Follow structured trading. This is now a variable high volume node. What does it say? Let's talk. Remember, this is a foreign language. Indicators, translators, of course, they kind of speak gibberish, in my opinion, especially when you have multiple indicators. It's like having everybody talking at the same time. Think about it. How do you make any sense out of it? And if they're conflicted and they're random, you can't measure it. You know? So that's why I don't use indicators. What does this tell me? Language. Too high? What about this? Mean reversion. Breakdown. Too high. Rotate up. Variable high volume node. I'm still not going to pay that. Now, we like shopping over here. Retail price. If I break away and check it after this, and it's too high, there's absorption right here. Why is there a green bubble? Because there's a seller, passive sellers on the other side. I break down. Follow the yellow brick road. Where do we come back? I'm not paying that. I'm telling you, I'm not going to pay that for my tuna. Break down. Okay? Where am I going? Great question. Sweep. My target is here on these shorts at the moment. What was too high? This and this. I'm going to label this. By the way, let's see what happens. Now there's more. Really? Yes, there is. And thanks for visiting TraderLab. Guys, I'm trying to go quickly and I apologize because I've got too much stuff to share. And this is the TraderLab, and this is a methodology that you can learn. It is not complicated. The only thing for us that's difficult is randomness. What was too high? What was too high? I am not paying that. Come on, Tom. Let's go back. It's down the street. I like that store. I'm telling you, it's too expensive. And we're trying to get here, which was yesterday's RTH retail price. We come across the range. What are we doing when we come across the range? Anybody know? We are squeezing because the market's fractal. It rotates over itself. So when you see a leg down, what's in this leg? Buy stops, buy stops, buy stops, buy stops, buy stops, buy stops. What's too high? This. Where do I come back? I pick the stops. This is another short. Retail, stop pick. And if I don't get buying above the pick, I call them stop picks. You know how you are. We all get picked off. You know that feeling, emotions. Where's my location? It's here. Where's my stops? Coming out over here. What do I got? Selling icebergs. What is this? A trigger. Why? I'm not paying that. Come on. Nope. Sorry, Charlie. Charlie the tuna. What about, let's come back to this price. Too high? This is the current retail price. This is the VWAP. There's my sellers. Where's my resistance? Here and here. Why? The sellers took over. What about here? I had buyers here. How do you know that, Tom? Absorption. What happened up here? Absorption. Why didn't we go higher? Passive sellers. Now we're under the last place where the buyers were, which is there and there. In there. Oh, well, I guess we don't want to own this thing. Let's find a way back in. Too high. Continuation short. Next target. Bing, bing. TraderLab. Now, we're not done, are we? No, we're not. How might this work? Well, we have a couple choices. Right here is a potential short. Now, you don't have to, you don't want to, no big deal. Wow, how do we see a short here? You're going to say to me. So let me show you. Now, these are just trades. They're not your trades. They are structured trades. Are you guys tracking? How about a like if you're visiting in YouTube? And guys, subscribe. Get in the TraderLab already. There's no cost for it. And if you're not a profitable trader, I'm just going to ask you, why not? I'm not saying you come here, you'll be a profitable trader, because there's a lot of work to do. And the work has to do with changing your beliefs. I mean, I know what we all believe. Me, too many years. of believing that I just had to make it better because I had winning trades. That has nothing to do with having sustainability in the business. Everybody has winning trades. I don't know anybody who's ever put a trade on that didn't have a winning trade, unless they only took one and it was a loser. Otherwise, we all have winning trades. What does this tell me? Let's look at the language. If this was the retail price from the ETH, and I had buyers here, they were absorbed, who knows? I have a buy sweep here, which suggests retracement, fail. And what do I get here? A buy sweep. What does it suggest? If I come back here and it's too high and I have a trigger, which is right there, and I test right here, it's a short. Now, more advanced. And where am I trying to go with this thing? Well, lower. By the way, the ETH low is a target coming down. I forgot to mention. I'm trying to go fast, and I'm not a great multitasker. And this is the next target here, Microcomposite volume point of control. And I always take it a little bit ahead. And where did it come from, Tom? Come on. Tell us. Show us. Where? Oh, wait. And I always say horseshoes and hand grenades. What am I doing? I'm coming back to balance in an intermediate time frame. And remember, where's the stops? Under here. Potential target, and who knows? And it's not a recommendation. Are you guys tracking? Is it making some sense? Whoa, I think I got that. Whoa, now let's come back. Structured trading. Doesn't mean these are your trades. What do I know about this? Can you see something? Sweep, boom. Sellers are here. Sellers are there. Buyers are here. Buyers are here. Sellers are there. I come back. Where were my sellers? They took over right there. See? Because why did it go up? There was a buyer. Who knows? A little short covering. Somebody tripped over the buy button. I don't know. I never will know. So I don't need to know. What I know is I want to be short, and let me bring you back. So right now, at the moment, let's look. Let's come back. This is the way it was at the time. So I come down. Now, there's another statistic. At 9 a.m., and this is Rod in the TraderLab did some data mining. By the way, the TraderLab's an advanced trading methodology, but it's not complicated. Advanced means you're going to learn something completely different in the sense of understanding market mechanics, how the market works. Most of us define the market by our indicators. That's all fine, except that's not what the market is about. It's not your indicators. It's the participant behavior. It's a different viewpoint. And the idea is if we can understand as best we can what's happening, we might get an edge. And that is the business. So IB30, if we take out the first half hour's low, which is 9 a.m., then there's a high probability we'll take out the first hour's high, low, over 90%. And that 08 is a target. So right here, I'm going for this. And also value area low is, all these are targets. ETH low, targets. So all spend is shorts. I'll see you later. Haven't had a long all day. No clue, but not my job. Now, let's look. Right here is too high. I have a distribution here. I'm taking you down into fractals. Fractals, what is a fractal, guys? Matryoshka dolls. You know what a Matryoshka doll is? They're stacked on top of each other. So even though the trend is down, think of it like the big Matryoshka doll. Inside of the trend, if you will, are small dolls. There's the same process in a fractal. So when I discuss fractals, they are not time-based. You guys use the term time frame. And probably many of you guys use your 5-minute, 15, whatever, 60s, 30-minute, if you do use time. There's no time here. There's only participant interaction. I can't wait on the clock because the market is not time-based except for RTH open close, that kind of thing. And maybe EU close creates some ripples. But it's not the clock. Sweep, break, too high, break, buyers, absorbed, see you later, trigger, there. Now, down. What is this? Outside edge. What was this? Auction. So here, too high, too low, retail, I'm out of here. Now I have another edge here and out here and too high. So let's just look at the behavior, see if you see anything interesting. Let's come back. This is too high. That is too high. This, we're under this. This might be too high. Back here, sellers took over here. Watch. See it? Short. TraderLab. Going for this, going for that, and out the bottom, wherever the bottom is. Now here, what would happen is you would get a scale, you get taken out. Okay, this is trading. Where is my next trade? Out here. Let's see. And that's a low volume node. What do we know? Retail in a distribution. Too high, too low. Retail. It's too low. I can come outside and come to the next outside edge and rotate here. If I get through here, I can keep going. You know, what's it going to do? Good luck, Tom, with that. Low volume node is here. Low volume node is there. Remember how this works. Low volume, retail. Too cheap at the moment, and I get above here, then where's my next location? Potentially out here and here. What else do I have? VWAP, mid, and stops. Let's see. I don't know. Do you? I don't know. Where did we go? LVN. Let's see now. What is this? Maybe it's a trigger. Let's see the behavior coming back. And I got to be aware, VWAP, VPOC. Let's see. And this is a potential trigger here. Let's look. I've got a sell sweep. Not so good. I want to see a buy sweep. Let's see what it does. I don't know. VPOC migration. What does that say? Help me with this, guys. What does it say? Language. Come on. I need you to help me. I can't do this all by myself. I can't think. You know, it's multitasking. Nobody's good at multitasking. The reality of multitasking, and what is hard for us, is we're basically doing one task at a time and jumping between tasks. VWAP, so where am I? I'm coming outside. My outside edges are here, here, and I got my VWAP, and I'm inside my value area. This is an area I still want to get short, and of course, the thrill of all this is where? There's my sweep, there's my VWAP, and I have stops at the mid. So right here, the teeth start to chatter. I'm in an area for a short. Watch. Now this, nothing. You know, I'm going, and right here, I'm stalking my short, okay? But what do I know? What do I know? I got stops above this swing. I got stops there. So you see, I know where the stops are. Now, when you're going to ask me, how do you know? Swings. What do traders do? They put their retail traders put their stops over the swings. And what's the other thing? Market goes down, go up. Market goes up, to go down. This is a short. Let's look at it. I got too many trades here today. We've been trading our brains out in the TraderLab today. Okay, here, liquidity comes in the book. I see my icebergs. I've got my buy stops going off. In here, if I open this up, I can see more detail. You see the liquidity. I have my buyers. Why is the market not going up here? Because the passive side is consuming these guys. This is like Pac-Man. They're chewing through the sellers, the icebergs, you see. Chomp, 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 wall. Now what? Right here, I see a red bubble under the buyers. That's my first hint. Buyers are here. What's over here? Why did the market go down? Passive sellers are here. red bubble. Aggressors are below the buyers. I'm now getting below the mid. This is a short. All this is a trigger in the TraderLab. You could be short here. You could be anywhere in here. And you're going here. It's called mean reversion. Mean reversion is a plan inside a plan. And the thing about mean reversion is it's mean because you're trying to identify an outside edge of a rotation. That is difficult. And what's difficult? Randomness, right? So our emotional states say, oh, wait, let's be sure. I want confirmation. Yeah, good luck with that. In the meantime, casinos do not look at the cards first and then deal them to you to get confirmation that they're going to win. And they pay the gamblers. The dealers detached from the outcome of any individual interaction with the gamblers. We need to develop a mindset for trading, not for certainty and getting our ego stroked by being right and getting approval. The approval comes from a vetted trade plan and executing it. That's your approval, not the outcome of any individual interaction that's random. Think about it. If you're in a random environment, how are you going to be right? There's only one way that I have found, and that's knowing that when I take risk, I have a statistical edge that favors me. If I'm playing a video game and just gambling, I'm on my way out of business. It's just a matter of how long does it take. Absorption, trigger, scale. Now, trade management. Where does this trade fail? Over here. Why? Sellers took control. Scale, pullback, VWAP. This is, subject to your plan, another short. It's called VWAP to VPOC, structured trade. All of these are structured trades. Now, when I say structured, they're not mechanical. Most retail traders go to their local guru, chat room, Instagram, all that stuff, and we're all looking for simple plug and play. Unfortunately, it doesn't exist, in my opinion, but you will have winning trades. But if you're not profitable, what is that doing for you? I know. You get frustrated, you go to the next chat room, right? Short to there, structured trades. Watch. If you took this to this, where does the trade fail? You do remember, right? What comes back in over here? You see this? Now, this is order flow. It's a little more advanced concepts. The sellers are there. I'm just going to draw a little box for you. You know, I have so little time to do this that I feel like I'm at the Indy 500 over here. I'm racing. And I don't think I can do a great job racing because I'll miss things because there's so much I have to share. Here's the sellers. There's the sellers. Same guys, potentially. Don't know. Back to the mid. Buyers, what's up here? Buy stops, icebergs, liquidity, break, below the buyer, test, and add or nothing. But remember where the trade fails, up here. Now, if you're managing tighter, when it comes across here, you get taken out. But you did have a scale. Then you put it back on. What is your time frame or fractal? Remember, fractal. Where are we going? South of the border. Where is our target? At 9:30, Central Time. I think we just took it out now, right? We have over 90% probability of getting here and getting the settlement, and maybe taking out yesterday's low. Am I current yet? I don't even know where I am. Yeah, yesterday's low and a single. This is our target. So for me, that's it. Hope you got something out of this today, guys. This is TraderLab. This is trading structured trades with a trade plan with a statistical edge. You got to do the work. Are you getting something out of this? Charlie the Tuna, yeah. So guys, how about a like? So this is the final target. Remember at the top of the stream, and this hadn't gotten here yet. And this is not to say I'm right. It's only to say sometimes I'm right, and it's not right. When I use the term I'm right, I'm really trying to say that I can predict anything. But I do have statistics. And the statistics suggest, based on that, we would go up. But the context, which is number one, says we will go down. And of course, it could do either, right? So the idea at TraderLab is to help you assemble tools, and then you got to get to work. And the work part of this, what took me, I've been trading 46 years, still trying to get better at this, right? And I always will, because of my passion. And it's no different than an athlete, whether you're a golfer or you play on a sports team and you're pro, you're still going to go out on the court. You're going to practice. In this business, replays, thinking about what you could do better, constantly coaching yourself or having a coach or a mentor, being in a community that is serious and professional, not being in romper room. And I'm not saying there aren't good educators out there. There are, but there's also a lot of nonsense out there. And it's very hard because we have limited time and limited assets, to waste time. So if you're not profitable, what I'm going to suggest to you is that's trapped equity. Because we've all spent years or whatever it is and all kinds of dollars, and I call it Trader Groundhog Day, and we wake up at the same place. Winning trades, not profitable. Well, let's stop doing that if it's not working. Maybe we can do something better. That's what the TraderLab's about. And I'm not saying it's better for you. What I'm saying is it's helped many traders who are not profitable become profitable. It's helped other traders get closer to profitability, and other traders are going to come to TraderLab and are not going to do the work because they're looking for somebody else to hand them plug and play. If you've already done that, tried it, then you have to say, well, am I going to just repeat the same thing? It's Trader Groundhog Day. And that's a decision we all make. And I'm not saying TraderLab's a solution for you guys. It's not for everybody. Nothing is. But if you're finding certain truths, your truth, which is you're working hard, but you're not getting anywhere. And I'm going to suggest just because you have a winning trade is really has no value unless it's consistent and has an edge. Having winning trades without an edge is gambling. In fact, I did a webinar, and maybe if one of Bookmap in the library, I wonder if I can find this. There's a library of webinars in the Bookmap Discord TraderLab community, plus the community itself. There's a lot support there, and we support each other. The other thing that most traders do not think about is the psychological obstacles to doing this. Whoa. This is one of our traders posting some charts. All kinds of stuff going on. Let's get back here. Traders posting charts, discussion, mutual opportunity for support, different things. Oh, hi Dan. If you're still in here, I'd like to post in YouTube for our visitors. Up in the library of webinars, there's one, Stop Gambling, Start Winning. If you can grab that and throw it in, or Stephen, if you're in here, it is in the library up near the top. So we have the TraderLab community. It's open to everyone at no cost. Also, the library of webinars. It looks like this. Start with the primer. Watch this one. I traded. It's just a day, walk in the park. Stop Gambling, Start Winning. This one is a little direct. I'm speaking to all of you, and I'm also speaking to TraderLab participants. And are you trapped in Trader Groundhog Day? That's when you work hard, curve fit, and whatever else you do, and you still get the same outcome. Random winners, but losing over time. And then you keep saying, well, I just got to work harder and make it better. I think I spent about 10 years doing that. Maybe not quite that long, but basically. because I built trading systems and I thought I could kind of solve for that. Not so much. But what has the market done now? Well, we hit all our targets. Now you could be done for the day. Have you ever thought about just trading to targets, extracting your edge, and then getting out of dodge? Or do you feel compelled, and underline the word compelled, to keep working and trading? And is this your edge? What have we found? At the moment, we took out all the stops that I was looking for. And I say I mean per plan, clueless. And there, yesterday's low. And there was a single there, and there's stops under yesterday's low. Right under here. And if I get down here, and what happens? Why did the market go up from here? You ask. Here's why. Because if I find too low and I get the stops out, what is going on? Why does the market go up? We took out yesterday's low. Well, if the sellers are stops and the buyers are the icebergs, and I don't get selling below, the market is now short, and in this leg are buy stops, retail trader behavior. What does that suggest? Rotation. Am I going to keep trading this thing? I don't know. Are you? I don't know. Me? I could be done for the day and head off to the Barca Lounger. I don't need to do anything else. If you followed a plan like this, would you keep trading when maybe your edge is now diminishing because the market is short? And where's my stops now? Here, anywhere, it could do anything. It could come back here, but what might the condition of the market be? If I come back inside, I'm in mean reversion. But there's no longs for me. Me, done. Now, if you find that difficult because you want to play the game, that is a whole different thing. That's about your dopamine fix, and it's nothing to do with the business. I hope that makes some sense. Did I point these things out to you? I don't know if I did. I see I'm multitasking, and I'm telling you I'm not good at it. This is the library of webinars. Ned, thanks for putting this together for us. Everybody chips in the TraderLab, either posting charts, interacting, helping us all get better. You can download the PDF, 60 structured trades, opening context alignment, auction market theory, context tips, a glossary of terms, and an audio, understanding mental obstacles, and there's a lot more. I've posted about 600 streams out there in the YouTube world, and in the library, there's some key ones that I think might have a little more value. But you guys should subscribe to the channel. If you want to visit the Discord, Bookmap Discord, TraderLab community, there is no cost. You can use the link in the bottom of YouTube. You just have to confirm your email so we make sure you're not a spam-alator. You guys have any questions, please post them. And Rod, thanks for doing the data mining. Yes, I'm getting Ben, that's a great question. In YouTube, Ben is asking, does VWAP to VPOC only work when it's aligned with an LVN? It doesn't have to be aligned with an LVN, but what it really is mean reversion. If the trend is down, then what you're looking for is outside in. We're only taking shorts today, at least me. And after this, I'm done. Unless, something sets up that fits my plan. But if I'm done for the day, I've had let me just say, a substantially enjoyable day versus some of the days where it's not so enjoyable. And that has nothing to do with me. It has to do with alignment, and when the plan and the context are aligned, that's where the edge will show up. And we still are going to take stops. It's overhead and cost of production, not a personal failure. And you really got to understand the psychology. Here's the other thing, and I feel all these things. And you do too. We cannot stop our emotional triggers. I mean, that's part of being human. What we need to do is become familiar with them. And then if we have emotional triggers, then what is the result when we respond to them? Well, and I think I might have talked about this recently. I developed something for myself, and it might be around late 1990s or 2000, somewhere in I don't remember any of this stuff anymore. Something called the error cost calculator. And what we all keep, I don't know, you should be keeping a journal, and that journal shouldn't just be you took a trade. It should be, what were your feelings? What did you do? Why'd you do it? And then I wouldn't look at them again. I'd be on to the next trade or the next day, and I just give it a cursory look and forget about it. Right? Be here now. Well, instead, I saw, all these behaviors, and I said, I'm going to quantify this. I wonder what this is all about. So I labeled my errors: skipping a trade, bailing out, moving a stop because of fear. If I took a stop on the last trade, skipping the next one, even though they're unique interactions. And I started quantifying it. Or FOMO in. No trade, just, hey, it looks like it's going down. That's an error. And whether I won or lost, when I broke my rules, even if I had a profit, I put it in as a loss, because I know over time I'd go out of the business if I continued it. So I quantified errors. And if you haven't heard this before, depending on which way the wind was blowing, it was $5,000 to $20,000 a month that I was basically giving away that I already had in my trading account. What would that do for you? Do you keep track? Well, for me, DK, no. If you want to take a long and it has an edge, then you take a long. I'm done at the moment. Because, why? The market goes down to go up, and the market goes up to go down. The potential for me in this environment is outside in, mean reversion. Right now I'm inside. So I will not get long yet or at all. In other words, if this thing changes all around and now it's no longer shorts and it's longs, doesn't matter to me. I'm pretty much done for the day unless somebody hands me a gift. And I don't think there's too many gifts in this business, but this is not any reason for me to get long. Let me tell you also why. In a balanced market and in a higher time frame, we are balanced. So, coming back here is possible, but I can't pick the low of anything, not my skill. So I don't try to do it. This would be at the most for me covering, because this is a buy trigger. But again, no interest in it, so I don't trade it. So would I get long? No, I wouldn't. But here's the beauty of this business. If somebody vets a trade plan and they understand market mechanics, this would be the target if you got long here. But it's counter trend in my opinion. And then this is your magnet and this is your target. These are both targets. This is an intermediate time frame target and this is the developing time frame target. It's called mean reversion. It doesn't qualify for me, so I don't care about it. I mean, I just go, well, that's nice. I'm not here to, I'm just not here to do this. I'm just here to take the trades that have the better edge. This has less edge for me, not for you. Me. So I hope that answers your question. You can do anything that has an edge. It's really, DK, the answer lies in statistics. I know for me that trading the short side, up until now at least, had the edge. Trading the long side might only be a squeeze of the shorts in this leg, and they're not the strong side. I don't think the buyers are the strong side. I mean, we failed up above. But it doesn't mean we won't rotate in here and abuse everybody. These guys, wherever the swings are, that's where the fuel is. If you're a counter trend trader, yeah, this is long. Me, not so much. I found, and I used to trade like a whirling dervish. And I think and I'm only talking about me now, not you. So I'm not judgmental. I traded like a whirling dervish. I would trade long, short, long, short. I was a high volume trader. What I found over time was it took too much work or energy, and my brain or my concentration would start to deteriorate when I got into shorter time frames. I determined for myself that since I take stops like we all do, overhead and cost of production, my risk is pretty constant. Why would I put risk on, unless there's some potential, the range? So I trade larger rotations, and I use microstructure for triggers and entries. But I also have to be aware always. I have to look left. If anything, guys, write this down. Look left. Why? Because if we get myopic and we go, oh, I want to get short here, what about the stops that are sitting there and the stops that are sitting here and the stops, at these prices? So I have nothing to do. The most I might have to do in this condition is outside in. So I would still be looking for shorts, and it's not a recommendation. I would not take longs. And again, I've fulfilled all my statistics that are meaningful to me, and I've come back to balance. In balance, it's outside in trading. So this is outside in, but if the trend is maybe down, other than rotations to squeeze out the weak side, I'm still going to be looking outside in because that's the higher time frame trend, maybe. And the other part is that's really a little interesting is this is let's come back to the higher time frame, the retail price. So what we did is we took this low out, and this is the highest volume in this, which is basically the consolidation. And in the squeezeteria, we basically got outside, squeezed everybody out, wherever it was. I think it was up here somewhere, and fell back in. So if we're back in here, now we've returned to a fair price based on this auction. And now we can just rotate around here. We got the stops here. And of course, we got everybody filleted who was short above here, potentially, probably. So what does that mean? What does the market do? The market goes up to go down. The market goes down to go up. The market goes up to go down. The market goes down to go up. So in all fractals and time frames, if it goes down, it can go up. Doesn't necessarily have to go here. It can do anything. So I'm just saying is in the concept of how the market works, it rotates because there's stops here, 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 here. Then there's stops there, there, there. So the market goes down to go up. Market goes up, which was yesterday, to go down. The market goes, and then of course, anomaly out, news, distortion, up to go down, and then down to go wherever, back up. So rotation. Does that make sense, guys? This is how you integrate fractals or time frames. So DK, you could take a long, but you need to consider the possibility that is a short squeeze and you might be out of alignment as far as but it doesn't matter. It's fractal or time frame specific. I always say to traders in TraderLab, and they probably think I'm a little, why aren't you trading buy, sell, long, short, long, short? Depends on the condition of the market. I trade from both sides or a dominant side. And I find, and if anyone keeps statistics, which most of us are too lazy to do, over time, which side has a better edge? And it doesn't mean you can't trade counter trend, but is the trend up or down? Depends on the time frame or fractal. For me, if I'm taking only shorts and now I see change and I got my targets, I don't need to take another trade for the day. I've already have a substantially enjoyable day. And not every day is, right? We all take stops, right? We all have loss limits. And from time to time, the joy of hitting a loss limit will happen. Happens to me, happens to you. Is that a big deal? No. Why? It's in the random distribution of outcomes. No matter what plan you have, it's an alignment thing. And if the market is not aligned with your plan, which at times it will not be, or at times it gets out of alignment, or you're out of alignment, and then it comes back in alignment, it's the sequence of trades that might cause you to hit a loss limit, and then later in the day, everything is smooth sailing. Why? Random. You see? Can you accept randomness? Can you accept that this is a business of statistical probabilities and not prediction and not being right? Can you accept that if you have a statistical edge and develop the discipline to absolutely execute only that edge when it shows up, that over time, if you manage your emotional states and actually do the work, can you tell me why you won't be a profitable trader and be able to potentially develop a career? Tell me why you can't do it. The only reason in my mind is either you don't have the capacity to do it, or the desire or the discipline to roll up your sleeves, remove what doesn't work, which is a lot more than you probably think it is. It was very hard for me to throw my indicators away. And why, you ask? Because everything works randomly, you see? That's why you keep doing the same thing that doesn't work. We believe if it works sometimes, which everything does, then we just have to make it better. That was my belief, and that's why I built trading systems. I thought I could really make it better with more things, more indicators, and then optimization. If you're tweaking and tuning and eyeballing, you're just doing what I did, except I did it manually. Then I did systems to do it electronically, software, programming, process, conditional statements. If this, then that. If not, then what? If it's this, then there's a track of logic. If it's not that, then it's something else. I took that education and I spent years doing this. Don't understand, this isn't a 3-month little deal. This is years. And I took what I got from it, and then I brought it to this. And I said, well, the thinking is correct. The process is not correct. Because that's the problem. Why doesn't this work? It works a lot of the times. And a lot of times we see patterns. Our minds see patterns all over the place. And then we start trading a pattern. Gee, that works a lot. How about this? Suppose the casinos had a game and it worked 49% of the time. But it was a guaranteed loser. But they saw how it won, so they kept playing it because they didn't vet it. Or they had random inputs. For example, we have a game in a casino called blackjack. It's always played the same way, right? 7 cards, they do this, they do that to turn the cards over, whatever you want to do, right? But it's always the same. Why is that important, and why are we in the gaming business? It's important what the casinos do because we're in the gaming business. If we're in the gaming business, we already have a successful business model to overlay trading on. We don't need to reinvent the wheel. We need to reinvent ourselves. We need to align with a proven business strategy. That's what the TraderLab's about. You don't need to reinvent the wheel. So somebody already did it, and they did it really well. In a casino, when they play a game, they have something called anchored inputs. In other words, it's always the same. Us, retail traders, we have random inputs. Let me ask you a question. If in the casino, sometimes with the game called blackjack, they dealt 10 cards, or the next time they dealt 4 cards, or they had a losing hand and they dealt 20 cards. Is the casino going to stay in business playing that game? Or if that was their only game, would they go out of business because of random inputs? Ask yourself, what would happen to them? Well, isn't that what's happening to you? How can you measure a random input in a random environment? The environment that casinos play in is the same environment we are in. 100% random, 100% of the time. What is not random? How do casinos play the games? That's why you need an anchored input. That means you can vet it, and you can determine, no matter what it looks like to you, over a large sample size, does it actually win? Don't forget, even if you play 30 cards in blackjack, you're going to have some winning hands if you're the house. But over time, you don't have an edge. You're on your way out of business. Why do you think that casinos can give you the cocktails, the ticket to the buffet, and pay the gamblers and still be profitable because they have an edge. Do you have an edge? Do you want to be in the business of trading? And it's not about being right. How do you measure yourself in this business? It's not winning trade. It's not being right. It's executing a vetted trade plan and only interacting when you have a statistical edge. Over time, if you've done the work and you develop the discipline to manage your emotional triggers, which is a whole nother conversation, then you have an opportunity to create a career path for yourself in the TraderLab. Now, what about these emotional triggers? Let's talk about that. How do you get control over the lunatic under the hood? By the way, the lunatic under the hood, I call it Hyde, Jekyll and Hyde. Jekyll, Dr. Jekyll, the story of Dr. Jekyll and Mr. Hyde. You guys ought to, if you haven't heard of it, Google it. Dr. Jekyll was either a scientist or a doctor, and he experimented on himself, and he kind of unleashed another part of his personality that would take over, and it was Hyde. And it's similar to the TV show we had here called The Incredible Hulk, Same thing. So this emotional being that's part of us is under the hood. Our primal wiring is to avoid the saber-toothed tiger, to look for certainty and confirmation, avoid risk. We are not wired to run into the burning building. We are wired to avoid danger. That's why our species has survived. Now you show up to be a trader. Wow. This primal wiring does not care about what you intend to do on the conscious level. It is the strongest emotions that are operating here. So you're pushing back against something. How do you do that? Here's the answer. Doesn't mean it'll work for you, because I believe anybody who comes to TraderLab can learn how to trade if they do the work. I've helped many traders over the years become successful. Turn the corner, as they call it in this business, change. Okay. And it doesn't mean anyone will be successful, because the work goes beyond, there is no plug and play. You actually have to learn how to trade, not plug indicators in and think that's trading. Just an opinion again, might not be true for you. How do you get control over the lunatic under the hood? Statistics. Instead of having an emotional trade plan where you click, you do this, you do that, you think, well, this looks like it's going to go down, I'm going to sell it here. Look, there's liquidity. But is there a location? Oh, I got the mid, I got the VWAP, I'm going to sell this. I think that's a good place. Really? Maybe. The word maybe is always with us. But if we don't have a statistical edge, then that's gambling. So how do you get control over the fear, the paralysis, the seeking of certainty to avoid risk? The term confirmation, is that in your vocabulary when it comes to trading? There's nothing that you can confirm. That is saying, let's use another word, certainty. The only thing that's certain in trading is it's uncertain. Okay? If we can accept that, then how do we manage the lunatic who's fearful? That is where statistics come in. Anchored inputs allow you to extract probabilities. You open your trade plan, if you're in TraderLab, to the specific trade that's qualified in this condition at a specific location, and now you have a trigger. And the trigger is also vetted. What does a trigger look like? What has to happen here? There's a sweep. There's absorption. This is micro mean reversion, not qualified, just so you know. I can't take this trade. But if it was out somewhere and I had structure, I'd be taking this. But it doesn't. So the thing is, if I have a statistic that I have vetted, when I open my trade plan, it says this specific trade, whatever it is, has an edge. See, there's your trigger. That's besides the point. Not a trade for me, okay? Except, remember, no longs for me, only shorts. When I say it's not a trade for me, I'm just saying doesn't matter what I do. But the statistics help you manage the lunatic. When all you have is fear and emotion, it paralyzes you. That's why you're always looking for confirmation. There is no confirmation. The best you have is maybe. Maybe it'll do this. Maybe it'll get back here. Why? Mean reversion. Outside in. Is this far enough outside? Where's my stops? Remember? Isn't it here? If I pick my stops and I get a trigger, then I'm going here. I'm not saying this is a trade anybody ought to trade. I'm just saying this is a structured trade if it's qualified for you. Might be for me, might not be. Just saying. To there. Remember we were discussing along? Where might it come? Back here. What's the trend? Maybe it's down or maybe it's nothing. Maybe we just get short back to here and then back to here. Or maybe we get in the Barca Lounger, join Rod in the Barca Lounger. He has 2 of them in his house, I think. And hang out. Done. The statistics give you something tangible when it comes to trades. In other words, I have X% probability. If I think the trend is down, maybe, for mean reversion. And I can't trade here. I got to trade outside somewhere. Does it meet my qualifications? And here's my percentage probability. Boom. I'm fearful, but I have a statistic. Or I have no statistics. I have random inputs. I'm gambling, and I'm always fearful. So I'm going to look for confirmation. Where am I going to get short when I'm sure? Where's that? How about here is where I might get involved? Right here. Where would you get involved? I'm just saying this is not a trade, I'm just saying it's theoretically. If you knew statistically, you can now manage the lunatic. Instead of being, and we're all fearful. By the way, when I go to put a trade on, I'm just as apprehensive as you are because I'm wired for the emotions. In other words, I'm triggered emotionally. But when I have a statistic, I can now manage the lunatic. If I don't have the statistics, all I have is the lunatic or emotional triggers. And I call it the lunatic because it is crazy, isn't it? Does that make some sense? DK, can you see why you might stay with the shorts? And by the way, you can take them. I call this a counter trend trade. Now, it might not be. I mean, maybe the market's going to go up. I can't answer that question. But I can tell you this trade, the target is this, and not a recommendation. And the question for this astute group of traders is why? 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 Stops are there. Stops are here. This is outside in trading. That's the mean. The best I got maybe is to get risk neutral here. And then if this is too low, it's going to squeeze me out. If it's not, I'm going to come under here. Maybe. Right? What is the only thing I know? Maybe. I don't know anything else. Maybe it'll do this. Maybe it'll do that. Maybe I'll get risk neutral. Maybe I'll take a stop. Maybe if I get risk neutral and it doesn't take me out, I'll come down here. Maybe it will. Maybe it won't. That's what I absolutely know. The best I have is maybe. When the casinos deal the cards and they have an edge, maybe they'll get paid. Maybe they'll pay the gamblers. That's the best they've got, and that's the best we got. Hope it makes some sense. You get something from this, guys? This is what we do in TraderLab. Remember, TraderLab is a community of like-minded traders who come together to leverage their collective experience. There is no holy grail. Here's a question, another question for this astute group of traders. You guys have software besides Bookmap. If you're into order flow, Bookmap is maybe, I believe, the best order flow tool out there. I'm always going to say maybe because maybe there's something I don't know about. But I'm going to say is I've been using this since 2015. It changed my trading. How did it change my trading? It helped me get more insight where it counted. It helped me trigger and manage risk better. It gave me a better understanding of other participant behavior, which I could never see before. Now, when you have other software packages, open them up. What do you see in there? 100, maybe 200 quote indicators for this astute group of traders. Why? Why are there 200 indicators? Why are you spending your potential career development working and mixing indicators and timeframes? Why? Well, we know why, but why are you still doing it? Why are there 200 indicators? Wouldn't 1, 2, or 3 be enough? You see? And here's the other thing. They all work at times, but do they have an edge? I'm going to suggest no. Unless, of course, you're exceptional. And an edge is not what it did over the last 10 trades. It's what did it do over the last 50 or 100. And if you're too much in a hurry to trade without having the answer to that question, that's FOMO. I want to play the game. Go to the casino, get the cocktails and the ticket to the buffet. This is where the sellers took over, right here. Let's watch. And again, not a trade recommendation. What are we doing? Reversion. Where are the buyers? They're out here and they're here. You see where the support was? Buyers, pull back. Sellers were there. See where we are? So this is called mean reversion. And again, stressing the term mean. Is this making some sense, guys? You get something from this? Let me know. Give a like if you're visiting in YouTube. Cumulative delta never got negative. I don't use cumulative delta. I don't find it, for me, I don't want, I'm just going to say, the way I trade, it has no value. Delta is right here. So the cumulative is just, it's the whole thing. What does that tell me? I'm trading here. So this is the delta I'm looking at. This is delta. And right here, you can see what's going on. The buyers are here. Then I got less sellers. Less sellers, less sellers. What does that tell me? The buyers are absorbing these guys. Now I get my buyers. Off to the moon, Alice. What happens over here? Where's my delta? Look below. Not a Zippo showing, but I got it there. What does that tell me? Absorption and liquidity. That's what it tells me. I don't know after that. So this is just saying up, 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 up. But if I'm trading reversion, I could be getting short there to there. That's what I know. And also then I know I've got my, here, buyers are above this, too low. Buyers absorbed here, potentially too low. Sellers were here. I got above it, tested, too low, too low, too low. Buyers are here, absorption, too high, break, trigger, reversion to there, back to where the stops? Here. You see? What happened here? Absorption. Absorption. Stops are under here. The way I think of this is, if the buyers are absorbing, if I take the retail stops out and the buyers, wherever they were, here, even though we get under the stops, if these buyers thought this was a heck of a deal, even though we take stops, they'll show up again. And that's why if you're taking a short here, you got a scale here, and you have to be aware of where the buyers are. And that's based on absorption. It's just, and it's part of a TraderLab process, So for me, and remember, I have no trades. If I took this trade, the best I got is coming here and then down to here, for me, to the outside edge. That would be what this trade is all about. And then if it comes back, the trade would get scratched, and that's the end of it. Please give a like. If you're interested in the Bookmap Discord TraderLab community, there's no cost for it. It's available to all of you. Download the 60 PDFs of structured trades. You got to reverse engineer them. There's no holy grail. Don't we wish? Not so much as I like to think. And the library of webinars. It's available to all of you at no cost. This is the library of webinars. There's a document section, the best of videos. And again, thanks, Ned, for putting this together. Be sure to hit the like, support the stream if you're getting something out of this. There is no cost for the TraderLab. You're all invited. Plus, there's a lot of additional education in the Bookmap Discord TraderLab community. Stocks, options, crypto, order flow with a high-tier tool like Bookmap, market maker behavior, algorithmic behavior, and a lot more. Please give that like on the way out. Trade safe, trade with the plan, and don't gamble. Thanks again, guys. I look forward to seeing you tomorrow. Have a